5 Web3 trends that matter. A data-driven look at the trends that will shape Web3 for the coming years. And now the person leading us through this is Eric Turner. Eric Turner is the VP of Market Intelligence at Messari, previously an analyst at S&P Global, and then before that, Fidelity. Please welcome Eric Turner.
So I'm here to talk to you about some of the trends in Web3 that we've seen as being most important to watch over the next couple of years. The great thing about where we are at Messari as a crypto data and research firm is we have a team of research analysts, about 30 of them, that spend all of their time tracking this industry. So it was easy enough for me to ask them what they're most excited about personally, what they plan on writing research about. And I think my one caveat was we had to make it a little bit different. We couldn't just get up here and talk about DeFi, talk about Bitcoin, which we've had some great panels on, great sessions on, but wanted to switch it up a little bit. So we're going to walk through 5 trends that span where we are today and some of the things that are being built over the next couple of years. We're going to focus on scalability, applications, and then get into 2 specific areas of applications that we've seen recent traction and growth. So those 5 trends that we're going to be covering, we're going to be talking about 2 on scaling, rollups and modularity. We're going to be talking about applications in general in the middle, and then we're going to get into 2 that I think are, really interesting concepts, and I think they're finally finding their time, and we're seeing some real use between decentralized social and decentralized physical infrastructure. So to kick things off on the scalability side, Ethereum rollups are kind of at the top of our list. I think you've seen plenty of layer 1s come out, plenty of networks try to compete with Ethereum on the specific promise of faster transactions, cheaper transactions, general scalability. If you look at where we are today, despite progress in a lot of these other networks, Ethereum remains by far the largest on any metric that you look at in terms of TVL, total value locked on the network, in terms of usage, and especially in terms of investment and what's being built on the network. So when we think about scaling and we think about Ethereum, rollups are very interesting to us because this will allow a lot of these next generation platforms to be built directly on Ethereum and allow interoperability between those EVM compatible chains. So rollups are newer. They've been being built over the past couple of years. But what also makes the timing of this unique is a lot of these networks have been going live over the past year or so, where we've seen a lot of that traction. So we have this case where tokens are being launched and networks are going live, where it's not peak bull market, where things might be a little bit down, going through a crypto winter, which is always the most interesting time for me, because we'll really see what the investability is, what the value accrual is, and how these networks work during that next peak. But no matter how you think about that, where we are today, from a profitability perspective, these roll-up networks, these L2s being built on top of Ethereum, it's actually profitable for those networks. So if you look at 2 of the largest optimistic roll-up networks between Arbitrum and Optimism, if you look at what they're paying to the base layer, what they're paying to Ethereum for fees compared to the fees that they're collecting, those are already profitable networks. And that's in a time where, again, we're not in a bull market. A lot of those applications operating on these L2s aren't operating at peak capacity. On the other side of scalability, we have modularity. So modularity takes a different approach to the question of scalability, where you have rollups focused on building a second layer on top of Ethereum or whatever the base chain is to inherit that security. Modularity instead focuses on breaking down all of the components of the chain, having specific sections for data availability, for consensus, and making it easier to mix and match different pieces of those chains. So I think one of the largest examples and one of the ones that have been most popular would be the Cosmos ecosystem when you think about modularity. What makes modularity different and a little unique is in the L2 space, when you think about that value accrual and where those fees go, yes, some of these early networks are profitable in terms of the overall network, but where that value accrues is still a little unclear. So will most of that value accrue to the main Ethereum network, or will it accrue to those L2s? when you look at modular networks and the way they are built, they're often called app chains because the specific applications on those chains are the main focus on a modular chain, and the value accrues directly to the applications. So it's a different way to think about when you're comparing L1 value accrual to the actual application chain accrual. I mentioned Cosmos because it has been the most popular, and you can see where the excitement is. This is a chart. I don't even think you can see the numbers of the price to sales ratio, and Cosmos sits at a little over 200,000, which if you're in finance, that's a little bit absurd. So there's a lot of excitement in the sector, and I think we have to see where things catch up. In the middle of this is applications in general. I just wanted to cover this because I think one of the most interesting things is a lot of people consider dApps, and I think DeFi falls into this, as being something where there isn't a lot of interest right now. You might say dApps are dead, and this is completely untrue. I think if you look at the application ecosystem and you look at the ways that they can continue to operate and value can continue to accrue to these applications, there's going to be a comeback over the next few years for these true applications that are able to scale in terms of the size of these networks or the protocols, and scale in terms of the actual profitability and what revenue and is actually accruing to the applications themselves. So, this is a lot of DeFi protocols. Of course, I think that's where you've seen most of the traction in dApps and applications historically. And again, the important thing to note here is this is one step further away from value accruing to the base layer in the L1. It's accruing directly to the applications, primarily applications that are run on Ethereum or EVM-compatible chains. And that's a big catalyst for these applications as well, because with EVM-compatible chains and with bridges, they're able to run on multiple chains and increase their user base, increase their usage. So this is a chart to kind of show what I was discussing in terms of their ability to attract capital, attract users, and actually scale with revenue. Some of these applications, the ones that really are going to continue to thrive, will be ones that provide liquidity or have a large TAM. So if you look at something like Lido or Maker, which are providing various types of liquidity into markets, those are the ones that have a very large TAM. And they also have the ability to actually generate profits and revenues for those users. You have some that, yes, they're great uses, great applications, but they're either very heavily incentivized right now by their native tokens, which questions the long-term sustainability, or the TAM is just much smaller, even for ones that are very interesting. So when we think about interesting applications, I think this is one that is top of mind for a lot of people. Top of mind for me, because our CEO was recently suspended from Twitter. He finally got his account back, but apparently he was impersonating himself, which I don't know how that happens. But decentralized social is one of those things where I think over the years we've tried to do it within crypto, and I think we all understand the reasons why we need to address this market, why it makes sense for people to own their social graph, where there is a $220 billion opportunity in social networks to be addressed with crypto applications. But the other thing about decentralized social, outside of just the ethical reasons to do it and the ethical reasons to give people power, is it is something where it's really a full stack application service when you think about it. So some of these logos are out of date, but really the point I wanted to get across here is when you think about decentralized social, it goes all the way from that base layer, whether it is a modular blockchain or Ethereum or an EVM compatible chain, up to the social primitives, which again really give people the ability to own their social graph, to move it around to different applications. We have a lot of people building there. We have the algorithm layer. So again, when you think about serving up different content to people and allowing creators to surface what they create, we have that level there. And again, we have a front end layer that's going to be completely rebuilt as all of the back end and all of this middle layer gets adapted into crypto. So I think you've already seen some traction here. You see something like Lens, Lens going from tens of users to tens of thousands relatively quickly, something where people are able to own their social graph. It's still very early, but if you think about us wanting to address real use cases in crypto, this is one that seems like pretty low-hanging fruit to me. And this is a good transition because if you think about how decentralized social is going to be powered, it's going to need a decentralized infrastructure to power it. So You're going to need somewhere that you can host files, that you can compute, things that are actually going to run decentralized social networks, decentralized networks, really anything. I mean, you've seen a lot of use cases for decentralized storage, especially. I mean, if you look at where we are today, you have Google having the ability to just delete your Google Docs because it violates terms of service. You have people losing access to their AWS content. Having decentralized file storage, decentralized compute, things that can actually take away some of those risks will be important not only for the applications we discussed, but really a variety of things. And what makes this most interesting is it really is going to that peer-to-peer use case of crypto. So it's allowing consumers to offer up their storage, offer up their compute. And it's a very lightweight model for the startups that want to build incentive mechanisms on top of this. Because the consumers end up owning the hardware, what really matters is that be it a token model or whatever that economic model is, to incentivize people to offer those up. It allows for a lot of innovation and a lot of portability between these applications. And on these decentralized infrastructure, obviously these quarter-to-quarter numbers don't look great, but nothing looks great in crypto between the last couple of quarters. But I wanted to show here is they're generating real revenue. And I think that's somewhat rare in this industry. When you look at Q2 2022 and you see across storage, computation, wireless, and blockchain data, almost $17 million being generated in actual revenues. That's gone down to 7 million. But the point here being that if you think about bringing people in to the space, you think about offering them something real and offering something usable, not only from the supply side, but from the demand side as well. Having things that have economic models that make sense are going to continue to allow for the sustainability of these networks. So I know I was on the agenda for 20 minutes. This was supposed to be a 15-minute presentation, so you're welcome for allowing you to go to drinks early. I hope this was helpful. You can read 150 pages of our thinking on all of the trends in the industry. Go to Messari.io. At the top, we have our 2022 theses. It's free. Download it, and you'll get a lot of these charts and a lot more. Thank you.
Terrific way to finish. Thank you so much.
Thank you, Eric.